All right, let's talk about one of the weirdest companies out there, Mesabi Trust. Seriously, this thing is a fascinating case study. It shows how two smart investors can look at the exact same business, and a super simple one at that, and walk away with completely opposite opinions. It's a real head-scratcher.
So, what if I told you there's a company that does, well, almost nothing? I mean, think about it. No big corporate headquarters, hardly any employees, no grand plans for world domination. Its entire purpose, its only job, is to collect a pile of cash and send it straight to its shareholders. Kinda sounds like a dream, right? Maybe a little too good to be true? Well, let's dig in.
Well, believe it or not, this business model is real. It's called a royalty trust. And honestly, the best way to wrap your head around it is to picture a toll booth. But instead of being on a highway, this toll booth sits right at the entrance of a massive iron ore mine. Every time a truck loaded with iron ore leaves the mine, boom, it pays a toll. The trust, it just sits there, collects all those tolls, and then mails the cash directly to you, the shareholder. That's it. No fuss, no muss.
And that brings us right to the company of the hour, Mesabi Trust, ticker symbol MSB. This is our real-life iron ore toll booth. It owns the rights to iron ore that's pulled out of the ground in the U.S. by a big mining company called Cleveland-Cliffs. So Mesabi just sits back, collects those royalty checks from Cleveland-Cliffs, and passes the money along to investors. Yep, that's the whole business plan.
So, the core debate, the real puzzle here, is this. Is this mailbox for money idea a brilliant, super simple way to invest? Or is it actually a hidden trap, one that's tied to a really unpredictable industry? This is what everyone argues about when it comes to MSB.
Okay, let's take a quick look at the vitals. The dividend yield is sitting around 3.7%, which is pretty decent. But here's the kicker. Look at that debt level. Minimal. You just don't see that. That takes a huge amount of risk off the table. And its beta, which is just a fancy way of saying how volatile it is super low. It means it tends to be a lot calmer than the overall market. So you've got a nice dividend, no debt, low volatility, and yet that last line says it all, right? The market is completely split on what to make of this thing.
And this really lays out the two warring camps. On one side, you've got the bulls. They look at MSB and see a beautiful, simple cash printing machine that Wall Street just doesn't get. But on the other side, you've got the bears. They see a risky, one-trick pony that's completely at the mercy of iron ore prices. Undervalued versus overvalued. Simple versus dangerous. So let's dive into both sides of the story.
First up, the bull case. Let's hear from the optimists. Why do they look at Mesabi Trust and think they've found a hidden gem? Well, it really comes down to a couple of powerful ideas about value and simplicity.
The number one thing the bulls point to is something called free cash flow yield. Now, without getting too technical, all this means is that for every dollar you put into the stock, the company spits out an incredibly high amount of actual cash. It's not just paper profits, it's cold, hard cash. That's the sign of an incredibly efficient cash-generating machine.
So the bull argument really stands on three strong legs. First, that simple structure we talked about. The money goes straight to investors instead of getting eaten up by fancy offices and huge executive salaries. Second, that rock-solid balance sheet. Having virtually no debt means it's incredibly safe from financial trouble. And third, when you run it through certain valuation models that hardcore value investors use, MSB just looks, well, cheap. It looks like the market is missing something big.
Okay, I'll admit that bull case sounds pretty compelling. But now it's time to flip the coin and look at the bear case. Why are so many other smart people steering clear of this stock? For them, it's all about risk and whether this whole thing is actually sustainable. And a huge piece of the puzzle for the bears is the dividend history. You see, you've got your regular kind of normal payouts, and then bam, look at that massive spike in 2025. Looks great, right? Well, the bears will tell you to hold on. That big payout wasn't from the mine suddenly producing a ton more iron ore. It was from a one-time legal settlement. It was back pay. And the problem with one-time events is they only happen one time. They're not repeatable. So the fear is that the dividend is going to drop right back down to earth.
So for the bears, it boils down to three major red flags. First, this thing is a pure bet on iron ore. If the price of iron ore goes up, you're happy. If it crashes, your income crashes right along with it. It's a roller coaster. Second, as we just saw, those dividend payments can be all over the place, and that big one was a bit of an illusion. And finally, and this is a big one, the trust's greatest strength is also its biggest weakness. Because it just sends all the cash out, it can't reinvest to find new resources or expand. There's just no growth engine here. What you see is what you get.
And this brings us right to the heart of the whole puzzle, the conflicting valuations. How in the world do you figure out what this company is actually worth? because this, right here, is where the bulls and the bears just can't see eye to eye.
It's really a tale of two valuations. If you look at it one way, using a model that just focuses on the raw cash it's producing right now compared to its price, it looks like a screaming bargain, deeply undervalued. But if you use a more traditional model that tries to predict the future, trying to guess what iron ore prices and payouts will be years from now, well then it suddenly looks pretty expensive, maybe even overvalued. It's the same company, just two totally different ways of looking at it.
So yeah, it all comes down to this one question. Is Mesabi Trust a brilliant, simple cash flow machine, or is it a commodity trap with very little room to grow? Which one is it? Is it a misunderstood gem or a dangerous bet on a single, unpredictable resource?
All right, we've thrown a lot at you, so let's step back and pull it all together. What are the key takeaways here? How should you really think about the trade-off you're making with a company like this?
Here's how to think about it in 4 simple steps. Number 1, remember, this is a pure direct bet on iron ore, nothing else. Number 2, the bull case is simple. They love the simplicity, the fire hose of cash, and the fact that it has no debt. Number 3, the bear case is just as simple. They hate the volatility, the dependence on one commodity, and the total lack of a growth plan. And that brings us to number 4, the verdict. At the end of the day, this is an income investment for someone who gets the commodity world and is okay with riding its waves.
And so, we're left with this final, fascinating question. Is Mesabi Trust's incredibly simple structure its greatest strength or its fatal flaw? It's kind of amazing, right? The very thing that makes one investor fall in love with it, that it does nothing but collect and send cash, is the very same thing that makes another investor run for the hills. Is it brilliant or is it broken? Well, that answer really depends on what kind of investor you are.